Thank you very much, Kun Charamporn, for a very generous introduction. Mr. Chairman, members of the board of the Stock Exchange, officials from government agencies, members of the financial industry, ladies and gentlemen, good morning. Sawadee Kap. It's my great pleasure to be here with you this morning at the 2013 Annual Symposium hosted by the Capital Markets Research Institute of the Stock Exchange. In particular, I would like to thank Kun Charamporn and Dr. Viratai, who unfortunately is leaving the Stock Exchange, I hear, for giving me this opportunity to be part of this prestigious event. And of course, I'd like to give you my warmest wishes here today for a very happy and prosperous new year. January is, of course, a time when many people around the world look ahead to the developments that the new year and the years to come may bring. It is therefore quite fitting that I take this opportunity at the beginning of 2013 to discuss the key points of interest to us, particularly in the financial and corporate sectors. In particular, what does the future hold for the Asian capital markets, and what opportunities and challenges will emerge? In answering this question, I intend to focus on the important work that the capital markets regulators in our region have been doing in driving regional integration through the ASEAN Capital Markets Forum, which was previously chaired by Mr. Tirachai, your own former finance minister and former Secretary General of the SEC. But first, let me provide some context. I think it would be useful to take a moment to consider the current environment and, as we say, the bigger picture. The severe financial crisis of 2007 and the ensuing global economic slowdown has left long-standing scars on all market participants. One of the profound impacts of the global financial crisis is the overhaul of financial regulations in global, regional, and local financial centers. This overhaul has been driven by the perceived excesses of the financial industry, as well as its capital and liquidity inadequacies, and the systemic risks that banks and other financial institutions present to global and domestic economies. Over recent years, we have seen significant changes in capital and liquidity requirements, permissible activities, bank compensation, and greater scrutiny of market activities. The deepening crisis in Europe that has followed has led many to challenge the very structure and stability of the Eurozone and the euro currency. Policy action to deal with the Eurozone's underlying structural and solvency problems will surely remain in focus. While monetary and market measures, especially from the ECB or the European Central Bank, as well as recent agreements on banking integration, have provided momentary relief in the Eurozone and calm to the markets, it is clear that the crisis is far from over. At the very least, austerity measures being implemented throughout Europe will surely dampen the region's economic outlook for a long time to come. In addition, the world is contending with the strength or the weakness of a U.S. economic recovery and finding a more stable and sustainable solution to the fiscal and public sector debt problems of the United States. While the fiscal cliff has been averted with a last-minute deal in the U.S. Congress, the fiscal imbalance in the U.S. and the difficulty of political compromise remain significant long-term risks. On the positive side, economic data coming out of China, where worries have been lingering around a growth slowdown or a hard landing, seem to indicate a recovery of sorts. It has been my belief that Chinese policymakers have demonstrated competence and effectiveness time and time again to address global as well as domestic economic challenges they have faced and will continue to do so. Closer to home, the major ASEAN economies, particularly those of Indonesia, the Philippines, Malaysia, and Thailand, have shown resilience amidst the global slowdown. We continue to see strong economic growth, and this has been accompanied by outperforming stock markets. As indicators, consider the fact that 3 of the 5 largest IPO transactions in the world last year were for Malaysian companies. Thailand and the Philippines have been two of the best performing stock markets, with the Philippines reaching record levels in December. On a more strategic and long-term basis, the future of Asian capital markets and their opportunities and challenges must be seen in the context of 5 to 6 irreversible megatrends that are evident in our region. First, the rise of the Asian consumer has changed the paradigm from Asia being the factory of the world to being the consumer market of the world. Made in Asia used to be the 3 most popularly used 3-word phrase. This is now being replaced by consumed in Asia. As you may know, as early as 2010, there were already more cars sold in China than in the US. And last year, there were more grocery sales in China than in the US. By 2020, our economists at Credit Suisse predict that domestic consumption in China will already exceed that of the US. And ladies and gentlemen, mind you, I'm only talking about China. So just imagine how the rest of Asia is doing. Second, the rate of urbanization in Asia is unprecedented in human history. Consider that in the last 20 years alone, over 300 million Chinese moved from rural areas to cities, or rural communities became cities. During the same period, over 100 million Southeast Asians did the same. This trend is expected to continue throughout the region through the next few decades, further supporting the rise of Asian consumers and the massive demand for commodities and infrastructure. Third, the ADB, or the Asian Development Bank, estimates that some $8 trillion of infrastructure will have to be built in Asia in the next 10 years, just to bring us to the level of the rest of the world. This will not only lead to great demand for construction-related materials and labor and other ancillary services, but important to us for financing as well. Fourth, Asia is already the main driver behind the increased demand for commodities, including oil and gas, metals, and agricultural products. At the same time, many parts of Asia are also big producers of such commodities. For example, just look at Thailand's agricultural production. Fifth, Asia is also seeing unprecedented growth in wealthy individuals or rich people. Today, there are already more US dollar millionaires in Asia than in Europe, and we're fast catching up with the number in the US. On the average, our economists expect 500 new US dollar millionaires that emerge in China every single day. Every day we have 500 US dollar millionaires coming out of China. Numbers are smaller, but they're also quite significant in places like India and Southeast Asia. This is generating new markets, not only for high-end products and services, but also in financial services. Sixth, Asia's rise is also reflected in the confidence and ambitions of Asian businessmen. Asian brands and Asian multinationals are expanding, especially given the weaknesses in the West. From the Sonys and the Samsungs of the last few decades, we now have Tata Motors, for example, owning Jaguar, and actually running it more competently than its previous owners. You have Li-Ning in China, taking on Nike. You have PTTEP from Thailand, making big acquisitions in North America and Africa. And you have AirAsia and CIMB emerging as sub-regional multinationals. Given the problems in the West and the growth-inducing megatrends in Asia that I have just described, the future of Asian capital markets is filled with both challenges and opportunities. Financing the growth and filling the gaps created by deleveraging Western financial institutions, as well as intermediating the large pool of capital going into and within the region, creates the need for further integration of regional capital markets. Let's take a closer look. Clearly, ASEAN capital markets have grown significantly in recent years, but individually are still relatively small with a limited range of products and services. They are also relatively illiquid, with high transaction costs and large equity premiums due to subscale trading volumes. The region is also characterized by a very diverse set of economies at different stages of economic development, from a fully developed but small country like Singapore to a large but just emerging economy like Myanmar. This also characterizes the region's local capital markets, making integration a bit more challenging. Notwithstanding this challenge, ASEAN policymakers, regulators, and market participants have to find effective mechanisms to collaborate and achieve parity with developed markets in order to make investors and issuers from within and outside the region look to ASEAN as the markets of choice. Capital markets integration is a compelling proposition for the following reasons. First, to improve the global competitiveness of ASEAN markets versus other regions. Second, to prevent the marginalization of individual markets. Third, to improve market efficiency and choices for local investors and issuers. And fourth, to expand business opportunities for local market players and thereby enhance the economies of scale. By integrating regional capital markets, financial institutions that have operations linked to ASEAN can expand their business scope and explore broader business opportunities. Furthermore, international investors will have greater access to ASEAN exchange products at competitive fees from a single access point. Therefore, with this in mind, the ASEAN Capital Markets Forum, or ACMF, proposed a comprehensive roadmap to promote the development of an integrated capital markets under the objectives of the ASEAN Economic Community Blueprint of 2015, or AEC. This is a great example of coordination between securities regulators from 10 ASEAN countries. Many of you may be familiar with the facts, and I know Kuntipsuda of the SEC is here. She's one of the authors of this blueprint. But allow me to briefly recap. The so-called implementation plan sets out a comprehensive approach to building an integrated regional capital market to strengthen financial intermediation, enhance capacity, and support national and regional growth. It contains 3 broad themes, each of which covers a comprehensive set of initiatives and specific implementation actions and milestones. First is creating an enabling environment for regional integration, involving the harmonization and mutual recognition framework. Second is creating the market infrastructure and regionally focused products and intermediaries. It also includes the ASEAN Exchange Alliance and Governance Framework, promoting new products and building ASEAN as an asset class, and strengthening the bond markets. Third is strengthening the implementation process, which includes aligning domestic capital market development plans to support regional integration and reinforcing the ASEAN working processes. While it sounds good on paper, the implementation journey ahead, as is often the case, is a bumpy one. A number of obstacles and challenges must be overcome in the process to integrate ASEAN capital markets before the benefits of regional integration can be fully realized. For instance, in order for further progress towards integration to be made, locally vested interests need to more closely support the regional agenda. In other words, regional aspirations and national objectives must converge. As I've often commented in many regional gatherings, we in ASEAN are very good in talking about the regional agenda when we sit together. But we are also quick to forget this when we go back to our respective capitals. It would be an interesting exercise to see how many of the national capital market development strategy plans actually incorporate the objectives and the roadmap of regional integration. Establishing the necessary regional infrastructure also presents obstacles for the creation of a regional capital market. Having to deal with the diverse regimes of capital controls and tax systems pertaining to capital flows are among the key difficulties in this regard. Other challenges include the reluctance on the part of governments and politicians to relinquish some of their exclusive rights and privileges, such as registrations, accreditations, and licensing. Despite the progress that has been achieved on a common set of regional standards, the right to change one's mind seems like an overwhelming consideration. Mutual trust and respect for the competence of regional counterparts still have to be strengthened. Finally, a number of the more advanced ASEAN members aspire to be financial centers, making agreements on common venues a lengthier process. Despite these challenges, I am pleased to see the adoption of phased-in integration as a practical path to full integration. Where 3 or more ASEAN members are willing to proceed, the roadmap allows for implementation of such initiatives. A good example of this is the ASEAN Trading Link. While 2 of the original prospective members, namely the Philippines and Indonesia, withdrew late in the process, the initiative is still proceeding with Singapore, Malaysia, and Thailand. I am hopeful that all the other deliverables in the roadmap, such as harmonization and mutual recognition, will follow suit using the same approach. What does this all mean for Thai financial institutions? As we look to the future, a new competitive landscape is emerging. We are seeing the emergence of regional or sub-regional financial institutions, such as CIMB, ANZ, DBS, and Standard Chartered Bank. But to date, Thai financial institutions are prominent in their absence as regional players. Integration will eventually be accomplished, especially with market champions such as those institutions I have just mentioned, but perhaps not as quickly as many would like, myself included. I guess these things just take time. Therefore, Thai companies must prepare for new regional competition, but should also consider the regional opportunities available to them on their own or through partnerships. This will require ambition, creativity, and boldness. In short, despite the significant obstacles and challenges that lie ahead, I believe that the future of the ASEAN capital markets is a very bright one in view of the irreversible favorable trends in our region and the prospect of enhanced regional cooperation, which works to the advantage of individual countries on a number of levels. With access to a regional platform, Smaller companies may find it easier to compete in global markets. More mature economies may enjoy easier access to other markets. So what's next? I believe that the ASEAN Capital Markets Forum is committed to creating the conditions for market integration, to mutual recognition and harmonization of capital market-related regulations. Other parties, such as the exchanges and the securities community, will also have to play key roles in creating market infrastructure for regional integration and in developing regionally focused products and market intermediaries. The ASEAN regional capital markets, once completed, is expected to account for 15% of the world's market capitalization and to allow free trade of products across any exchange from one or single access point. I hope that you'll agree with me as the wishes for the future go. This sounds like a very positive one indeed. Ladies and gentlemen, thank you very much for your kind attention, and I'm happy to answer any questions you might have. Good morning.